Welcome to Machine Minds, where technology and humanity meet. I'm your host, Greg Terrusian, founder of Samson Rose, a recruiting and search business focused on the robotics and AI industries. The Machine Minds show is where we dive deep into the intricate world of robotics and artificial intelligence. As a staffing industry leader with a passion for the frontiers of technology, I'm pleased to be bringing you intimate conversations with the founders, investors, and trailblazers who are at the heart of the AI and robotics revolution. In each episode, we dig into their journeys, the applications of the products they're working on, and the breakthroughs that are shaping our future. Join us as we explore how these machine minds are transforming the way we live, work, and understand our world. Whether you're an entrepreneur, a tech enthusiast, or just curious about this amazing field, you'll learn something new with each episode. Let's delve into the extraordinary. Let's delve into Machine Minds. Hello and welcome to Machine Minds, the podcast where we dive deep into the world of robotics and AI. I'm your host, Greg Terrusian, founder of Samson Rose, a robotics and AI-focused search firm. And on today's episode, we are joined by Abe Murray, general partner at AlleyCorp Robotics. Abe, welcome to the show.
Thank you, Greg. There are not enough people talking robotics out in the world, so we really appreciate your show, and we're happy to be here with you today.
I really appreciate that. Okay, let's jump into it. So really, at first, I always want to get to know our guest, and I want to get to know you. So can we start about learning more about your background and your career journey that led you into the robotics investment field?
Sure, and I'll try to say less about this because I'm more excited about robotics, but I've got a little story that sticks in folks' heads. I'm a high school dropout, left school to run fishing boats and factories in the family business. And that's actually relevant to robots because I've actually run forklifts. I've been out there on factory lines. I've done automation. I've done some of these jobs. And now we're taking tech back into these factories. And it's pretty useful to have lived that world for a bit. But I went back to school. I turned techie startup guy, did my own startup after business school, ton of fun, didn't feed my baby, and landed at Google. I was super lucky in my career. You know, my advice is always be super lucky. That worked for me. Wound up in mobile teams before iPhone happened and saw the whole mobile blow up, built a media business there, built and led the Google research product team before AI became shiny, and got to ship a ton of AI across Google and see some pretty amazing stuff and learn the ropes. And then went off to spend 5 years applying AI in health tech, raised about $2 billion at Verily as part of the team there, built a value-based care business. And not robots, but it's still taking this like cool AI tech we've been building in this industry and trying to jam it into a really complex real world business model. And that's actually a lot of what we'll talk about when we talk robots in a minute. But on the other end of that, I was angel investing, looking for what was next, and bumped into Kevin Ryan, who built AlleyCorp. And he was looking to build up a team to invest in robotics and automation because we believe the future has to be automated. I'll say a bunch about that later. But he really sees that as being a huge part of our world in 10 years and looked around and didn't see the investment landscape acting like that was true, and thought that both, one, it's super important to go make that true or we're all going to really struggle as a society. And two, there's an opportunity to build some really phenomenal businesses that other people might be missing. So here we are.
Awesome. Thank you for that. And just so I understand, and also the listeners understand, AlleyCorp doesn't only focus on robotics, right? There's AlleyCorp Robotics, which you're part of, and there's different verticals within there.
Yeah, correct. So to say a little bit more about AlleyCorp, AlleyCorp is a evergreen fund created by Kevin Ryan down in New York. He now has 4 general partners. I'm one of them, focused on different areas. So we have a general tech investment area, a health tech investment area, a social impact investment area, and robotics and automation. And we're actually a venture studio. So Kevin's built a number of really important companies throughout the years, such as MongoDB, Gilt, Zola, Nomad, Business Insider. And he's also been an early stage investor. So we're generally pre-seed and seed. The whole fund is really built out of people like myself and like Kevin, who have built and led companies. And when we invest in and back our founders, we're doing that from the perspective of people who have lived their lives alongside them at some point, and can hopefully bring that experience to benefit our companies.
Amazing. And the mission within AlleyCorp Robotics for this vertical specifically, is that, like you mentioned, encouraging and fostering that future that everything's going to be automated, or are you actually trying to create world-changing, impactful technology that no one's even seen yet, more moonshot stuff, or across the
Yeah.
board?
Yeah. So my simple answer is yes and yes. Though I have a thesis that I haven't yet written up, but plan to, which is basically robotics is often lumped into deep tech, and I think that is true. There are many hard deep tech, big technology challenges in robotics, and we look at them and we would back them at the right moments and get excited about them. But we actually think that there's a lot more low technical risk robot automation company opportunity than people see, and that there can be a ton of value created today by kind of assembling systems that exist and bringing them to bear on market problems. So that's why I said yes and yes. We think that there's a ton of work to be done where some of the biggest challenges are go to market, just fulfilling the needs of existing customers with technology that's pretty close to or a couple years out from being on the shelf. We also think that to really build the future that we need to exist in 10 years, there need to be some fundamental changes. We need to push forward what is possible. If you follow Brett Adcock at Figure, he talks about needing to build like the whole thing from top to bottom, building new actuators.
Right.
We know that manipulators are still very much an unsolved problem. There are tons of true deep tech problems in robotics, and we get excited about those as well.
That's great. So let's talk about the evolution of hardware in robotics. I think, gelled on the line that hardware is hard, right? That's what you always hear people talking about, and hardware development has always been considered extremely challenging. So can you share your thoughts on how these advancements in technology have made hardware more feasible in recent years?
Yeah, and you've had guests on your podcast who have really made this argument succinctly and strongly, and I will echo it. Buck Jordan said it, Fades said it. We have seen the cost of hardware come down by a factor of 10 in the last decade. It's more or less tracking with Moore's law, and somebody should write a PhD paper and actually count it, because they count CPUs and GPUs. They tend not to count this so much, but absolutely the costs have come down. So machines that used to cost many hundreds of thousands to assemble and put together to solve a problem in the world can now be done for tens of thousands of dollars. And that absolutely unlocks a number of business opportunities. To my point, we can assemble and solve problems with existing hardware in places that if you were talking about a $500,000 CapEx build, you just can't help a lot of the world. But at $20,000, $30,000, $40,000, you can. So I think that this modern moment in robotics is absolutely predicated upon significantly cheaper hardware. But the hardware is never enough. And while hardware is hard, and it still is hard, even when you're like synthesizing a bunch of existing things with, quote unquote, low technical risk, it's still hard. That hardware is no good without software. And I lived it in 2012 when I went to Google Research. Machine learning was not being written about that much in news articles. We weren't even calling it AI yet. Computer vision had not been solved. We were struggling to identify objects and scenes at scale, had not been done. And while I was there in Google Research, we had these moments where we published papers showing we can find thousands of objects in a scene. We can take a YouTube video, tell you everything that's inside of it. And a lot of that has become commodity now, where my teenagers play with it as they're writing code in their coding classes in high school. Like, that's amazing. But that also unlocks that hardware to do interesting things. So I think those two things together mean that this really is a modern moment in robotics. We can take this much cheaper hardware and solve much harder problems with it in a way that is significantly reduced from a technical risk perspective. I no longer have to quiz a robotics team on whether they can actually identify objects in a scene. I know that's something that is solved.
Yeah, it's a given at this point. And talking more about the state of the industry, the robotics industry at the moment, it's seen tremendous growth, obviously. What's your assessment of the state of the industry, and what's evolved since AlleyCorp was founded to focus, or at least this vertical, the robotics vertical, to invest in the space?
So we're 2 years into this at AlleyCorp. And you've had Fady on your podcast before. Fady's up here in the Boston area with me. He's a friend of ours. He and I launched our robotics funds more or less around the same time. And prior to that, there were no focused robotics funds. There are a number of people who do deep tech, who do robotics as a portion of what they do. We're close friends with many of them. We love them. We encourage them to invest ever more in this space. But really, it's a very small group of people who are funding robotics companies, especially on the early stages side. And Fady made that point quite strongly. 2 years in, that's still true, right? On the positive side, we are now having, so maybe 2 years ago, when Cybernetics launched and AlleyCorp Robotics launched, it was kind of news. People came out of the woodwork. They were so thrilled to talk to investors who understood their world, were fully focused on it. And that was great, right? I mean, frankly, it's easier to do marketing when you're an N of one, N of two kind of thing. At the same time, we want more friends here. Over the course of those 2 years, a number of new funds have shown up and said, we're very interested in this space. And they've reached out to us to understand how we're thinking about it. And they are now investing in this space. That's great. And existing funds have added investors and partners who are thinking about robotics and automation. So we do see that the idea is catching hold. I still think it's easily an order of magnitude away from where it needs to be, right? If we think that the industry is 10, 100 times bigger in 10 years, absolutely the investors need to show up and support that, and they're slowly building. I'm looking right now at a chart which you've probably seen some version of. The robotics market investments really peaked in 2021 at the height of COVID. So there was a combination of the labor challenges became extremely acute, and technology had hit this moment where robots could do more, and a lot of money jumped into robotics and automation. That was our first year officially being on the job, and it was exciting to see, but we knew that there would be a COVID bump. Investments have pulled back in 22 and in 23, and so we're probably half of what we were 2 years ago, slightly below that in terms of investing across the landscape. I think that, maybe it drops again next year, but probably not much. What's really interesting about this is the valuations on rounds have actually increased, and the amount of money that companies are raising has increased. So I think that what's been happening in the last couple of years is a lot of money jumped into robotics because they saw the intense need for support for people who are struggling to hire labor. And I see that all the time when I talk to customers. We are not taking jobs, we are fulfilling unfulfilled jobs with the majority of the companies that we back. This work just needs to get done and the people aren't there to do it. So a lot of people jumped in to get companies going on this space. And then we figured out what works and what doesn't work. And I think that the quality companies are continuing to raise and grow and do well. And the people who are investing in the space have a better understanding of where the risk lies and what to invest in and what to worry about.
Yeah, totally agree. Yeah, it's interesting when you think back, because we're obviously in the bubble of AI right now where everyone wants to invest and not get left behind. And there's a new startup every day. So a lot of dollars are flowing into that space. And with the hardware side of things, when it was robotics and automation, the glaring need became, but everyone was aware of it during COVID, right? People didn't want to miss out. So you could raise capital fairly easily. You could raise with a PDF, an idea, and a solid team or solid founders. But after a while, I think the whole investment landscape, even not just in hardware, but in general, is moving more towards like route to profitability, right? And instead of just growth and scale, it's moving that way. And if you don't have a solid business model, if you don't have that route clearly lined out, what you're going to do after your Series A, a lot of the early funds are doing their seed and Series A, but then after that, if you don't have latter stage investors, then what happens? All the money, all the effort, all the product has gone to waste. So,
totally. And the good news is, I think that people building robotics companies have thought harder about business models than the rest of the tech industry had,
definitely.
because they had this forcing function of you have to afford the hardware, right? If I'm building the next social media app and I can convince people that if I can get hundreds of millions of people using my app, we'll figure out how to make money, the marginal cost of delivering that is pretty low. People can take swings on crazy things that don't have the numbers adding up yet, because finding out is relatively inexpensive. And robotics, finding out costs money. You have to build a machine, you have to put it out in the world, customers have to pay for it. And so I think that founders, even back in the heady days of pre-COVID and COVID, they still had to have a business model that made sense. And because of that, I think that their valuations made a little bit more sense. So they probably didn't chase up as high and they haven't come down as much.
Yeah.
I've definitely seen that be true. And then I think it's become even more true as the macro shift has occurred. And every company that's raising investment dollars has to have a pretty good story to tell about how do we make this into a real business. And people are more focused on go-to-market and revenues. And that's absolutely helping across the robotics landscape.
I think indirectly, it just came to me as well, something that has helped the hardware world has been the shift to work from home in a backwards way, because there's so much available real estate commercially, whereas that's another hurdle that you have to cross in the hardware world. It's not only equipment and capital, you need the team, you need physical space, and it's cash incentive, labor intensive, and space incentive to build these things, the majority of them. So if you're paying through the roof for rent and you can't negotiate some sort of favorable deal, you're even more of a disadvantage than someone building, like you said, a social media app or something like that.
Totally agreed. Yeah, our companies usually need to come together in person to build the thing. It's got a physical presence. You might be building a small micro factory, or certainly you're assembling a piece of hardware and making it go in the lab.
Right. Are there any recent investments or projects that you and your team have been working on that you're particularly excited about, or that you can even share with the audience?
Yeah, well, of course, I'm heavily biased. I'm excited about everything we've done. The teams are phenomenal, and they're all solving really important problems in the market. I sound like I'm talking my book, and I am, but we invested in these companies because we believe they're phenomenal companies. But to highlight a couple, and I'll start with one that's maybe counterintuitive, but just to illustrate that we are really investing in this space, right? It doesn't have to have hardware. It doesn't have to be something people might classically think of as a robot. I just published a newsletter talking about the consensus view on robotics is wrong, because I was asking GPT to draw me robots, and they kept giving me humanoids and robot arms. And that's part of the market, but not all of the market. Much of the market looks different than that. It's purpose-built hardware solutions that are part of a service that a company is deploying. So I'd say we think more broadly than just what people think of classically as robots. We're really focused on smart hardware and the need for our society to automate the things that we do, because there won't be enough people in 10 years. So with that context, one investment I'm super excited about is Coop AI. They are an insurtech firm, and they are underwriting insurance risk for robotics companies, automation companies, drone companies. And they got their start, brilliant team, really looking at what was happening with Waymo and with Motional and with autonomous vehicles, and realizing the future of cars will be autonomous. And today's insurers are terrified of that industry and backing out of it. And so they said, we must be able to underwrite these cars at a much better way than the classic insurers are, who are just being afraid, putting very high price tags on it. But by the way, these cars are safer. We know that. And they just stream data off of them so that you can see what's going on. So this team went down that path. And then they said, that makes a lot of sense, but we also want to expand into anywhere else that we're doing autonomous software controlling hardware. And so robotics in factories and logistics centers, anywhere you're deploying a robot, even a sidewalk delivery robot, is going to have this challenge. And drone companies the same way. So I met Coop because they were reaching out to me to sell my companies on their solution. And it turned out a bunch of them were already using Coop and they loved them. And the others were actually struggling with this. So insurance might not sound sexy, but you can't really deliver a service in the world B2B if you're not bonded, insured. And it was absolutely getting in the way of our companies being successful. So I'm super excited about that team and the entire industry. As we grow this industry, Coop benefits. So that's super fun. Another area that I'm not ready to announce the investment yet, but we've got it over the line, is lab automation. So I spent 5 years at Verily Life Sciences. I was doing value-based care and chronic disease management, but I had a number of good friends at the company who were doing lab automation. They were running CLIA labs at scale. They were running clinical studies at scale. And they were all struggling with the fact that we have these highly paid, extremely highly trained humans, PhDs, in the lab behaving like human robots, pipetting and doing all kinds of things to make our lab processes function. And so I saw how we had an advantage at Verily because we did invest in automation, but I also saw how hard that was to do. So I've been looking for 2 years for great companies in the lab automation space. I found one. We're very excited to back them. The news will become public at some point, but it's the first of many because there's many things that you need to do to deliver the future of biotech, pharma, better health for all of us. That's another growth area that is still today basically run by humans, which is insane.
Yeah, it's interesting when you put it that way. And I think that's where a lot of people that aren't in the industry or in the space, it can really hit home to them that you have highly skilled, highly trained, high costing or high ability people doing very manual, low impact work where you could put a piece of automation in there and it makes everything more consistent. The machine's never going to take a break, frees up that person to do so many more important things, use their PhD and things like that. Where
that's the biggest thing, frankly. And I think we'll see this over and over again. But I have a tongue-in-cheek concept I call the law of infinite opportunities. Some people see what we're doing in automation and get afraid that the machines will take our jobs and we won't have things to do. My counter is humans will always come up with fascinating and important things for us to do. We've done that throughout the ages and we will continue to do so. And I think lab automation is a perfect example because these are literally people with PhDs. They have worked very hard. They have gotten amazing education. They are capable of great things. And we have a ton of them sitting in labs doing things that are not a useful, application of that intelligence that they have. And by the way, these people could be helping solve the cancer that's going to kill me. They could be helping find materials that will unlock energy improvements, right? There's so many things they could be doing. And today they are mindlessly pipetting. They are mindlessly, moving things between machines. It blows my mind. I think that in addition to just running our businesses better, having more profitable biotech, finding better molecules, the pie expansion that will come from this on the second and third order effects will be pretty exciting.
Yeah, definitely. I wish I remember who had said it. I was at a conference a couple of months ago, and it was very much what you're saying, but highlighting the fact that humans have always needed a new form of technology. No form of technology that's come out or been released, whether it was the car or your microwave or whatever it was, has actually taken over human ability or stopped us doing something. We always need something to come in and free up more time and more ability so our mind can expand and our abilities can expand, and then we can go into the next wave of what we can achieve or what we can build or what we can do in the world. And I think this is a great example, like a very real world and clear example. Like you're saying, free up the PhD person's time, they can go and do impactful things like cure cancer. I mean, everyone can relate to that, but from even an autonomous vehicle, right, that's going to do so much for people as well.
Very much so. Yeah.
So some of the, in this current state and looking forward, challenges and opportunities for robotics, there's been a ton of advancements, obviously, but there's still aspects of hardware development that can be particularly challenging and that are still very much hard. Where do you see, or what do you see specifically in that area?
Yep. So something I learned from banging my head against shipping machine learning across Google for 5 years is the difference between a demo and a production feature is vast, right? And especially when you've got machine learning, now we're calling it AI, a thing that looks good in a demo can be very ugly in a real world application. And that's when we're just talking software, right? Something as simple as the auto response on Google Messages or Gmail. It was very hard to get that thing to like filter out unreasonable responses, and the team did amazing work over many months to move it from demo to production. And yes, it's about cleaning data, it's about improving the algorithms, but it's often very hard to make that move. And we shipped a lot of things that worked. We canned a lot of things that did not work, that did not make it to the shipping date. So that is true across the board, and AI makes improvements, but it's still really hard. And I think about that a lot when I look at AI companies in general, as the difference between a shiny demo and a working solution is vast. This is true in robotics. So when I meet founders who have built something, they've got something that looks pretty compelling. They're using today's AI. I'm excited about agriculture. I'm excited about picking crops. I've spoken with a number of founders who have, their crop picking reliability is at the 75, 80% pick rate, which sounds great. But you talk to farmers and it's not even close. It's got to be much higher. And so then the question is, do you believe you can move from where you are today to where you need to be to deliver a solution that's, a customer will purchase because it solves a job for them? That shift is really hard. And sometimes you can make it over the line and sometimes you can't. So that's tech risk that in some ways you don't find out until you just put the time in. And it can be interminable. You just keep improving the quality, keep improving the quality. And what we did at Google in software is we had massive data sets, right? You think about YouTube, the number of video hours that exist on YouTube. That's the kind of data set size that we were able to unlock a lot of magic from. Nobody's got that in robot land, right? Even the largest data sets are small data sets compared to what we need. So while I don't disbelieve that certain founders in certain areas can move from that 80% demo to the 95%, or really in a manufacturing situation, 5 nines of reliability, 99.999%. The factory line can't stop, right? Some people will make that transition, many will not, and many don't even know that they won't make it. So that always makes me a little bit nervous. It's still very hard. And what I like in the interim is people who understand what today's algorithms are capable of, and they put a human in the loop, and the human plus the algorithm plus the hardware delivers a 99.99% solution that the customer is happy with, and everybody makes money. So, when you do that, that gives you the time with a working business to climb that quality curve, and you will eventually get there. But if you depend for your business to have solved that problem before you can make money, before you can get to profitability, you might have a bad day. So I think that is still super hard, probably the hardest thing engineers are doing across our economy right now, certainly in my robotics field. But absolutely, if you're in an AI company and you said you do something clever with AI, you're banging your head against this problem.
Definitely. Yeah. I think you hit the nail on the head there with the human in the loop element for this bridging the gap at first. And for a lot of people, especially whose jobs this is going to impact in a positive way, still having them involved, maybe they become a robot operator or they're just like guiding it or whatever it may be, or it's like copying what they do. That element is safety for them, but also upskilling for them and then increasing throughput. So when it's put in that way, it's an even better transition for the employer and the employee. And then at the end of the day, the product that they're producing.
We have seen that absolutely be true. I have a friend who's been quite successful doing janitorial robots, integrations, among other things. And they have seen that, in general, janitors are not necessarily well respected by our society. I respect them. To folks out there doing that, thank you. My mother cleaned houses for many years to keep our household running. But it's not a respected job. And it's also a very hard job, and it's a hard job to fill. So classic, can't hire these people. They quit. Right. They have attrition. And they're aging, right? Our population is aging. Our janitorial staff population is aging. When you replace what they've been doing today with a robot that does a lot of what they do, now the staff that they are able to attract can get the job done because you're scaling their productivity, and they no longer consider themselves janitor. They consider themselves a robot assistant. It's a, up leveling in how they view themselves in society and how society views them. And it becomes a job they can do as they age because it's no longer got the physical rigor. So we see that in roofing. So our company, Renovate Robotics, is building roofing robots, which is one of the top most dangerous jobs in our country. Everybody needs a roof over their head. You think about Maslow's hierarchy of needs. It's right there at the bottom, right? Shelter. And when your roof is leaking, you're going to stop it. Roofing companies can't hire roofers. And the roofers that they can hire are aging. And many of them want to keep working as they age, but they can't keep doing it. And they get really excited about, if you can give me a robot system that does the really hard, grungy work, they're very happy to do the more pleasurable work of flashing and edge work and things that they can really take pride in. And I think we'll see this happen over and over again. And this will help with the transition period because it won't be like jobs disappear overnight. It will be you become 50% better at your job. You become 200% better at your job. And then the fact that we can't hire a second person to help you isn't as much of a problem because you get twice as much done.
Right.
And as the machines get better and our workforce slowly declines and slowly ages, hopefully we'll be lucky if we can just match the growth of productivity to that curve so that we don't have trouble actually getting our roofs fixed when they're leaking.
True. Well, I think we touched on both aspects here because I wanted to ask you about those challenges, which you definitely hit on, but I also wanted to see get your thoughts on what you think the most promising opportunities are in the robotics industry in the near future. I feel like we touched on a little bit of that, but does anything else come to mind?
Yeah, so lab automation is one of my answers. The sciences, healthcare in general. I think elder care. When you talk about an aging population, think about the biggest demographic growth in our population is the elderly. We won't have the people to take care of them, and we will have more of them to take care of. I will be that person myself. Just add years. So I think there's a ton to be done there, and I'm looking at a number of companies in the space and seeing some phenomenal founders solving really important problems. Construction, super excited about construction. We need to build more houses. We see people struggling to afford rent. All of these are a symptom of us not building enough in this country. And I don't pretend that it's all labor, because certainly we have silly NIMBYism and regulatory decisions we've made as a society. But even if we unmade those, we would struggle to build the housing that we need. So we need to go in and improve this industry, and there's tons of opportunity. The third one we haven't raised is logistics. So that might seem too obvious, right? Because Kiva Systems existed. They had a great outcome. There have been a number of other great companies working in logistics and warehouses, and e-commerce invested a lot in this over COVID. However, it's still the case that the majority of warehouses are not automated. The majority of automated warehouses are not nearly fully automated. There's so much to be done. And while it might not sound exciting to think about how can we make it more cost efficient to deliver goods to your house, moving things around the world is one of the biggest drivers of CO2 emissions. So if we can do this better, we can reduce CO2 emissions. It all ties back. That's part of what gets me so passionate and excited about the space. Is it's very hard to list a opportunity or company that we'd work on driving productivity improvements and building a solution for the world in that doesn't tie directly back to something like feeding my kids, giving them a better environment in the future, et cetera. And I love that, even in a place like warehouse logistics. But it's true, and it's a huge opportunity. And I think as big as that opportunity is ahead of us in logistics, every other space is 5, 10, 15 years behind logistics on the curve of, value to be created.
Yeah. Couldn't agree more. Again, when you're in the space, you speak to people there, you don't realize how much technology has already been adapted and implemented in that space, but there's just so much more to go, so much more that you can do. So if we look at the future, looking ahead, what do you envision as the future of robotics? And are there any emerging technologies? Obviously, we're in this AI frenzy right now with your GPTs and everything else, but is there anything else that you think will help shape the industry in the coming years?
Yeah. So absolutely, this new work in AI, foundational models, LLMs, et cetera, that will show up in robots. I don't know when, right? I'd say I'm on the more conservative side here, having seen how long it takes for this stuff to get good enough to be rolled out and be, scaled. So I'm going to say probably 5, 10 plus years before foundational models and LLMs are really driving a ton of value inside of robots. But the good news is I don't need to be right or wrong about this particular debate. It's almost, if not academic, it can only help me. So when we invest in renovate roofing robotics, when we invest in civ robotics, they're doing solar surveying. When we invest in Earth Force, which is doing vegetation management to prevent forest fire, like so many super exciting companies that we're investing in, they are really doing two things. One is finding a really important hardware solution to a problem that labor is struggling to do today. So all of those companies, every company in our portfolio is figuring that out. Two, they're figuring out how to sell that to a really complex market, right? Finding product market fit, figuring out go to market. extremely hard. If you're selling to oil and gas, you're selling to utilities, you're selling to quasi-government agencies managing forests, all of this is super hard. So if I'm wrong and foundational models show up and make robots even more magical in a year, that's exciting, because that means every one of my companies will just take that commodity off the shelf, put it into their system, and have their system be smarter. I would challenge anybody to take that magic AI and quickly compete with any one of my companies, because they have to climb that go-to-market curve, that complex sales process,
Right.
that building trust in the industry, that when you put my machine on your job site, I'm not going to hurt your construction workers. I'm not going to mess up anything else you're doing. I'm not going to slow you down. So I think that improvements in AI will absolutely benefit this industry. They can't come fast enough. But I do think I have a somewhat non-consensus view that I think it'll take a bit longer for it to show up inside of our company. But we can't wait. Um, I often step back. I love sci-fi, right? I've read all the books and send recommendations my way. So when I imagine a sci-fi future 100 years from now, right, I do imagine AI is brilliant, humanoid robots, the problem solved. They're everywhere. They're cheap. Um, Anything you can imagine, it happens. Even in that world, I think that for every humanoid robot out there doing a humanoid robot thing, I think there's probably 50, 100, 1,000 pieces of smart hardware doing automation that are generating a ton of value in the world. So while I do think humanoids have a big role to play in the future of robotics, I think there's an even bigger role for all of the things that we're doing now, which are very focused automation. How can we make, the most effective, framing for a house? It's probably not a humanoid robot swinging a hammer like a human does today. It's probably something else. And frankly, it's probably a totally different materials process that robot material scientists, like robot material science labs, will discover and robot factories will produce. So I get really excited about everything else. Yeah.
That's great. That's great. Yeah, it really makes your mind go down that rabbit hole, doesn't it? Especially when you tie in the sci-fi future and everything that, I don't know if you ever watched Black Mirror or anything like that, where they were predicting so much that happened already. And you just go down any sci-fi movie or route or series, you can see things that are coming up now that you thought would have been so far-fetched and so far in the future, but it's happening. So much is happening in front of our eyes. How do you see the role of venture capital evolving in the robotics sector as all the technology continues to mature?
My answer to this is always more. I think more people will take
more
it
funds?
seriously. Yeah, I think
Yeah.
more funds will come into the space, more money will be deployed. Certainly there's been a pullback post-COVID, but I think what you will see more of is more of people who understand this space well. Deep tech firms putting more of their money into robots, firms that don't have a deep tech play moving into deep tech and having robots be part of what they do. I think more and more people are seeing the reality that hardware is important, automation is important, and they need to own a piece of that or they're going to miss out on some of the big wins in the future. So I see people coming into the space, and I think 5 years from now, there will be significantly more of them. 10 years from now, probably most venture firms will be playing, and doing something around this. I also think the later stage, it was interesting listening to your conversation with Fady, and he and I have chatted about this. There was absolutely a dearth of funding in early stages. A lot of angel investors did that. A lot of, the iRobot mafia and the Kiva Systems mafia were funding some of these folks. So the early stages were totally missing. I think there's been historically some pretty good growth capital once companies get to where they need to get. I think right now we're seeing Series A and Series B. We need more friends. And so I'd like to see a lot more people jumping in there and understanding that these companies can be really phenomenal companies when they win and crack the go-to-market nugget and start bringing the revenues in.
Yeah, I agree. I have that conversation at least once a week. That I'd even say like the BC round, like series, the seed and A, I'm seeing a lot more activity in, or at least the people who are funding the seed round committing to the A if certain milestones are hit and like making it more achievable. But that BC round is like you're either dying or you're getting acquired. It's hard to really have the buy-in.
That's absolutely true. But the good news is I also see people raising the rounds. So
Yeah,
if you're building something compelling and you've got the numbers and you've got the market traction, you can go get it done. It's just hard.
it is.
So there's quite the filter there right now.
True. True. Well, before we wrap up, do you have any advice for entrepreneurs or innovators who are looking at to entering the robotics industry and maybe getting
Absolutely.
investment from people like yourselves?
Yes. And it's funny. I had this conversation with a great group of people from Harvard Business School where I was, and I mentor teams coming out of there. They were a pair of roboticists and super sharp. And they were going down the kind of path that I went down right out of my engineering master's program, which is they got really excited about their technology.
Mm,
And I love that, right? Understanding what's possible on the edge of technology is how you unlock a differentiated business, go do something nobody else can do. You have secret knowledge. I love it. It's also how many technologists uh, run a company into the ground because it's a classic person with the hammer problem. I understand
right.
this problem. I'm going to go find something to do with it, and they love building more than they love talking to customers. So my advice over and over is go talk to 50 customers. Right? People give fundraising advice. Talk to 100 VCs, and you'll find your lead. And I've seen that work. I've seen founders who have talked to 5 VCs and gotten no's, and 10 VCs and gotten no's, and they're getting discouraged. And I just say, this is a numbers game. Come back to me when you've talked to 100. Then we can talk about whether you should be discouraged. And I've seen that work over and over again because you adapt as you do the pitch. The same is true on the customer side. Go talk to 50 customers, understand what they need, try to sell something before you've built it. Find a problem that is so painful for the customer that they will pay you money to even move a solution potentially in their direction. Then you have a product market fit signal. Then you have some revenue coming in. Then you have runway, and you have some confidence that what you're doing is important. And I see people miss that a lot. When I see people get it right, I get super excited.
That's great. Great advice. Great advice. I've heard it from other people in real world scenarios where they've been part of, your stealth mode startup with really great tech and don't want to share any info, and you come out to market and no one wants it, or it's too expensive, or you're solving a problem that no one wants solved. So yeah, that couldn't be better advice, honestly.
Yeah, I always, just to follow up on that,
Yeah.
I tell founders to go talk to their competitors and make friends with competitors.
Mm,
People are always so afraid, and they shouldn't be. If you believe in what you're building and believe in your ability to build something great, you shouldn't worry about somebody else ripping you off. And there are things you shouldn't share, but I think in general, people should talk about their ideas and be unafraid of putting them out there. So I
it's a
give that
great idea.
advice as well.
Yeah, that's great advice. You normally find like people, they enjoy talking about their work and breakthroughs or progress. Obviously, if it's not proprietary or it's not going to be detrimental to their business, but how you think about a problem or how you think about the space, or even if it's business development or whatever it is, getting partners on, people tend to share that stuff pretty freely, I find. Even in the recruiting world where I'm part of, we always knowledge sharing, and or whether it's networking or
Yeah.
conferences are such a great place for exactly what you're saying.
It's a cliche of expanding your luck surface. You just never
Mhm.
know.
Yeah, you never know. Finally, can you share any exciting upcoming projects or events that our listeners should keep an eye out from AlleyCorp?
Well, shameless plug, if you're building robotics companies, we want to hear about it. And while we generally look pre-seed and seed, we're looking pretty broadly. As we said earlier, the Series A and Series B investors aren't necessarily there. So we'll look at companies there. We really want to see phenomenal companies be backed in the space and grow. And then I really care about the ecosystem. There aren't that many people in it. I'm probably going to wind up meeting a ton of them. And I love connecting folks when I can, when I see an opportunity. So reach out and say hi. But that's my shameless plug. We do an annual robotics event for founders and investors down in New York. We'll be doing that early next year, so stay tuned. And then we did something last week, which was super fun, which was kind of a small salon dinner with about 15 robotics, deep tech, climate investors. Love that. We're going to do a series of those next year with founders and different folks in different cities. So if anybody thinks that's exciting, reach out and we'll put you on the list.
That's great. That's great. Where can the listeners find out more about you and engage and with AlleyCorp?
So AlleyCorp.com for AlleyCorp. We are robotics. It's easy to get to from that front page right there. And I am super responsive on X, I guess, Twitter and LinkedIn. So you can find me there.
Perfect. Well, thank you again for being on the show. It's been an awesome conversation and discussion. There's so many gems in here. I'd love to pick out a few, but I mean, I've just got a very long list here. People, go back, listen, take notes, listen again, and then reach out, because Abe shared some real gold in this episode. Thank you again. And I hope to speak to you soon.
All right. Thank you, Greg. This was a pleasure.